Hi guys, it's Matt here from the Forex Coach, just doing a weekly update to the day and swing trading signal. Now, as you know, we do offer a trading signal from us here at the Forex Coach, and you can join it. It's free for the first 7 days. Then if you do look to join, you can just do it through the website here at the forexcoach.co.uk. Just sign up to the signal. We've got all the information here for you. So if you want to look at the reviews, what we're planning on doing and taking our account from 20k to 200k, and you can be part of it if you wish. So the weekly review then for the week just closed. Banked profit. So we actually came in with a profit in the end of just over 1%. However, we are sitting on 2 open swing positions which are currently in drawdown. So we're currently sitting on about -2% drawdown, which isn't a disaster for swing trades, but it's not as good as what we'd hoped. So it's been a difficult market to trade the last couple of weeks. As you know, we had that losing week last week, and that losing streak continued into the beginning of this week, unfortunately. However, the positive note is we stuck to the trading plan and we managed to pull it back. We had some great days middle of the week, and we managed to pull it back, and we have closed and we've banked a profit, which isn't great, but it's a start. It's the first week of the month, so I'm not worried. We just need to achieve our 5% target for this month, and we will still be on track for our 200k. So let's just go through and have a quick look. It's not going to be a long video tonight because, as you can see, it's been a really long week and it's now already 7 o'clock, so I want to get finished and done. So overall, what's been going on? So the market has been pretty tough for us, and the reason being is the signal is new, and like any trading, it does need adapting and developing as with the markets. And we have been doing a bit of that and tweaking it and adjusting things and stuff like that. But one of the issues that we have got is that every now and again, maybe 10% of the time, we get these long drawn out trends like we've seen in the market of late. Now, a lot of our strategies are based on probability trades, divergences, pivot hits, pullbacks to moving averages and stuff like that. Now, when you get these long drawn out trends, the market just keeps going and doesn't do these pullbacks, which means that you're going to get a drawdown period. Now, that's normal, and you will get a drawdown period in any trading strategy, and any trader will. The key really is to keep good risk management and to ensure that you just keep trading, even if you reduce the pip size or the pounds per pip size, so you're reducing your risk. Keep trading your setups, because the problem you've got if you stop trading is that you then will be anxious to take trades and worry about taking trades and stuff. So if you take trades, if they're based on your setup and you're trading well as to your trading plan, and they lose, there's nothing you can do about it. It's just a drawdown period. So we started off the beginning of the week, I believe was the 2nd. Let's just have a quick look at the calendar. Oh, Monday the 3rd. So let's just have a look at the 3rd. Now, there was a lot of trades this week, so it's probably quite difficult on some days for some of the members to follow, to be honest. Next week, I really want to fine tune it so we have less trades but better quality. We found that what we was doing is taking a lot of part profits and then adding back into positions this week, and it all got a bit messy, to be honest. So we want to try and clean it up a little bit and make it a bit easier for people to follow, because I'm realistic as to understand that people doing this have got most people are doing full-time jobs and trying to do this on the side, and it can be very difficult to try and manage these trades when we're having 10 different positions a day, so to speak. So first trade of the week, we had a winning trade on the euro US dollar that was left over from the previous week, and we took, I think it was about 40 pips in the end of that. So 35, around 35 pips on that, and then I think 40 odd pips on the second part. So that was that. We had a losing trade on oil. Can't remember off the top of my head what happened on that one, but I think we were trading it short in oil because I knew this move was coming, and it did come, but unfortunately we were a bit early on that one and a bit premature. We then had a Aussie New Zealand dollar. This was an unfortunate, and this is something that I wanted to talk about today actually. We're getting these getting nicked out of the market, and it's happened probably about 6 times now over the last 2 weeks. Now, those 6 times it's happened has cost us probably all in all about 6% of our account. And when I say nicked out, I'm literally talking a couple of pips. Now, I usually give a lot of leeway with my stops as a result to stop these sort of nick outs, because there's nothing worse than having the overall direction correct and your analysis being correct, but your stop loss just being slightly out of the wrong place, spread getting you out, or these volume spikes. Now, we're getting these big runs and we're just getting these big volumes that just seem to be nicking out stops and reversing the market. Now, you do see this from time to time, but it's just happening a lot at the moment. It's something we need to be cautious to. So this was an example of a trade where we had the overall direction right and the analysis was correct for the move down, but we lost 63 pips there, as you can see, because we had our stop above this trend line. We had it above this 00 level here. It was all above a previous high as well. So usually if we're getting a continuation of this trend down, this was the 4-hour chart, then we wouldn't have seen this prior high getting broken. So there would have been stops above this, but we thought it was safe enough, and as I say, literally to the pip took us out and then went our direction for about 140 pips and stuff. So it's frustrating, but then I always say to the guys, the members, at least the analysis was correct, because what would be worse, although this sometimes feels worse because you think, oh, I've just been stopped out of a winning trade and I was right, it's actually better because your analysis is correct. And I keep saying that to people. It feels horrible and you think, oh, these 2 pips, absolutely horrible. But if you have the correct analysis, then you're not doing anything wrong. You just need to maybe adjust your stops and stuff. So yeah, 63 pip loss on that one. Then we had a winning trade, dollar yen. I'm just putting screenshots on some of them now because unfortunately I haven't got time with all the videos I'm doing, updating the group, the members and stuff like that. I'm literally just updating this as quickly as possible. But anyway, we took 48 pips for half, and then I think we closed the second half for 47 odd pips on that one. I've done the monthly update, so I talked about what happened last week and we had the losing week, but how we are tracking on target for our 20k to 200k. So we are on target for the month. We're still averaging around about 5% a month. I know it's still early days, but I'm still confident in that. And like I said to the guys, don't worry about 6% losing week, because we can easily have a month where we turn over 15% plus in a month of our account, and that would more than pay for a losing week, 6% losing week a month. So don't panic, just trade consistently. We had a bad run, so we had long CAD again, looking for these pivots and stuff. We had 3 entries overall, but they would have been small size. So all of these trades that we were taking are all between 0.2 and 0.5% risk. And we had a few losers on there. Probably overall we lost, there we go, 1%. So with 3 entries, we still only lost 1%. And again, like I said, at this point we were still down. So we carried over a 6% loss from last week. We were then sitting by Tuesday another 2% down. But what have we done? We've managed to pull it back and we've not traded aggressively or done anything like that. We've just traded consistently. We then had a winning pip on oil, so great trade this was. We took the first half of 45 pips. This was the short, so follow on from the losing trade that we had on Monday. We had 45 pips and then 110 pips on oil. We knew we were short in the Dow Jones and some of the indices. I've done the video update last week about how I'm doing a crash account and swing shorts on these trades, and we done a short and we managed to close 43 pips on that, which was good. We had a long on dollar CAD. We closed half of 45 pips and then the other half reversed. We ended up holding on to it about minus 20 odd pips. Then I think we ended up closing the second half, which I'll show you later on, around about 30 odd pips. We had a really good day on the 5th. So what day was the 5th? It was the Wednesday, yeah. So, we'd gone from being 2% down to then having a 3% up. So overall, it put us about 1% up for the week. However, it didn't close out at 630. I think it closed out about 400 or 500 up. But as I say, you will get swings like this and it will happen. So just trade consistently. Had Swissy, we had 20 pips for half, and then we've closed the later halves in a profit at a later date. Dollar yen, we had half for 20 pips. Pound yen, we had half for 15 pips, and I'll show you the screenshot. In fact, I'll talk you through this one. So we had pound yen, again, got hit by the stop on that one. So pound yen, so we took it, this was an entry based on the 2-hour chart, and we had divergence or something like that over here. I think we took it originally, and we are back in now just with a small position, as you can see. But you know, we're not looking for big moves, we're just looking for plays back down to some of these moving averages. You know, I'm quite happy for these trends to continue and then get long, but I'm just looking for these pullbacks and these moves which we should be getting in the market. Now, unfortunately, we got stopped out. It's not showing you on this account, but we literally got pipped out again by a few pips on here, for it then to come back into what would have been sort of break even at this stage. It's pulled back a little bit since. But anyway, we've had a pullback, so we are back in on the short side on that one, so we have to see how that plays out. But again, it's still a small position on that one. But yeah, it was another one of these. So we had, you know, we had this high here, we had our stop, I think, was just above this 4750 level, and as I say, it's just breached. It just seems to be breaching these levels before continuing. Again, we did have a positive day, so we were on track, as I say, returning our 20k to 200k in 3 years. We had another profitable day. We had some good moves. We took some money out of gold. It's since reversed on us, and that's one of the swing trades that we're now in drawdown in. So we took part profits. It's been a bit of a difficult market to trade in, because it's just swinging one way and then the other, and it's very unclear to get the direction on it. We had a great trade on the UK 100, but another one that just got pipped out by 2 pips. So the trading idea was superb. We lost 30 pips here. We moved the stop down. Now, if you look at our price envelope that we use on the daily chart, our stop was actually just on it, and price has just gone above it, nicked us out. Literally, you can see this line. That's probably about 2 or 3 pips before the market then went in the direction that we were looking to play. So another one where we got pipped out. So if we get this sorted and stop these, we're going to be well in the money each week if we can stop these small stop outs. 25 pips second half, that was on pound US dollar, so we were on the long side, so it was a continuation of the existing trend to the upside, and we had I'll show you the exit on this. So you can see here we took our first half at 25 on the 4-hour chart. It just hit the 21 period moving average, so we knew there was potential for a pullback, but we left half the position in. It did pull back before it had this big push up, and we got out on fairly good exit, 50 odd pips on that, and then it did pull back. Short US 30s, we had another good trade on that. But again, because of what had happened with previous weeks and that, these are all very small positions. So although we've had quite a lot of winners last week, you know, we started off the week at 2% down, and we had to reduce our risk because we're following a 6% loss from the previous week. We've gone in with a 2% risk, so we would then trade and reduce risk for the rest of the week because we needed to ensure that we got a profitable week. Gold, we had 301 pips on it, so we've taken profits on gold. Overall on gold, I've just calculated, we've made about 0.7%. However, we're now in drawdown of about 1.5%. So overall, on gold, we're in negative territory, even though we have banked profits along the way. Some of the guys in the members got done some great exits today. I'll show you the chart for gold in a minute. In fact, I'll show you now. You can just see what the price action's been like and how difficult it's been. So originally we had this move, and it looks bad at the moment, but on the daily charts, it looked like the potential after this cross of this MACD that we were going to pull up and see some upside on gold. Now, our first exit was this 21 period moving average. Now that actually happened at about 11 o'clock at night, and we missed that unfortunately, so we would have taken half the profit out there. Since then we did get some small profits, and then basically on this move up here this afternoon, if you look at the price action, if I go down to this 5-minute chart, you'll see now, although these are looking, the pips first of all on FXCM, this is equivalent to 167 pips. So where it says 1,607, it's equivalent to 167 pips effectively, because the gearing on this is about 10 to 1. So I'll just hide them to make it a bit clearer what we're looking at here. So we were, I mean, this price action, you can see the volumes that have started to come through on gold. It's really sold off. We had some long positions. We took some exits up here, and it looked like it was going to push higher. We had momentum on the 1 hour chart coming through. So we had the momentum here at this point in our favour. We had positive growing momentum. We had the MACD. It looked like, so we took half profits. Now our target was only just about up here to clear out of these positions. Because we took half profits and we'd banked about this 0.7%, we were then able to increase the stop loss. So we moved the stop loss down because we're still within our risk parameters, because we were still looking at taking out the previous lows, which are over here. So the previous lows on the dailies, so these lows here, so there would have been loads of stops down here. On the daily chart, we had the 500 period moving average facing up. On the weekly chart, we'd had a good move down, and we had this moving average here, this 100 period moving average sort of curving up. So it was looking to me like we were going to get this bounce down here and then this pullback, you know. And I'm not saying gold is going to shoot up by any means, but I was looking at, you know, a move higher to take some profits out of this. Now looking at it now, it's looking very bearish how it's closing, but I'm still hoping that we're going to get this pullback next week to get us out of these positions, hopefully in some profit, and then potentially it may carry over. But my other thought process of what was going on is we've got a lot of political uncertainty. At the moment, we've got the G20 summit over the weekend. We've got a lot of geopolitical stuff going on in North Korea and the potential threat from them. And the concept was that, you know, we're going to see this risk off attitude and money start coming through to these safe haven flows, you know, strengthen the yen, strengthen the strengthen gold, etc. And unfortunately, it just hasn't happened, which has really surprised me. I genuinely thought that we was going to see this week. So there was part of it which was technical with this trade, and then there's part of it that was more geopolitical, sort of fundamental based. So the other thing that had happened on the hourly chart as well was we've not only have we tested this level up here several times, which has weakened it, we'd also had a trend line across here which was breached. So we had this trend line going across here. We'd hit it 3 times, 4 times on that candle, 4 times on that candle, and then we smashed through it, and I thought this is it, this is now going to go. So unfortunately, it looks like I'm wrong. We might still get stopped out on this, but if we do, the overall loss on the trade will only be around about just over 1% after taking the profits that we've taken up here. So it's not going to be a major disaster, but the potential for this trade, when we were here, the potential was for huge profits, you know, up to here. You know, we were looking at the potential of, you know, a couple of thousand, which would have been a couple of hundred pips on that. So disappointed, but we will move on from this. So yeah, as I say, we've taken part profits along the way on gold. Oil, again, this was another stop out, so, but we then ended up making it back. So we lost 72 pips. We literally got nicked out right at the top here where I'd put this line. So we had our stop just above this line here, and again the market just picked us out, literally a couple of pips, and the stop was based on the 8-hour chart because it was just above a moving average. But again, it just done this overshot, pipped us out and then started to come down again. So luckily we started starting to roll over. It then bounced back up. We got a re-entry with a 26 pip stop at the same position size, so pounds per pip. We were then risking, I don't know, 0.2%, and for it to then, you know, roll over, and we managed to get out in 90, I don't know, 95 pips or something like that. So all in all, you know, you can see the other trades there that we took where we had these profitable trades. So as I say, we saw the roll over here. You could see on the price action this was rolling over, so this was confirmation that we was going to get a continuation of this downtrend, and we was looking for it to break to new lows and take these lows out. And we had a stop up here, but unfortunately it just picked up and got us out, and then before it then rolled over. So again, another one where the stop loss was in the wrong place, but we ended up being in profit, and that's the key, being confident. If you're confident in your analysis, then you need to go back in on a trade. If it takes you out and you're confident in that your analysis is right, then what's the reason why you shouldn't? Here you go, here's the 8-hour chart. So as you can see, that was the 30-minute chart. You can see there the moving average that we had here. You can see it just overshot it by literally a few pips, and that's what took us out of the trade. But as I say, we got back into net, we were in profit overall. CAD Swissy, that was the second part of a trade that we had short on that. Lucky we got out on that because the CAD data has come out really strong this afternoon, and I did want to wind down so we weren't in really any positions before non-farm payroll other than gold, and the reason for that is just too risky. We had non-farm payrolls along with the CAD data, so it was going to be very volatile. CAD sold off, CAD strengthened massively, and as a result these have pushed back up, so that's the right move to get out those positions. So yeah, we had sort of 3 days really good. Last night we had this flash crash in silver. Just done a post to the guys, so we were in a gold position. It didn't really affect the gold position, it came off a little bit but hadn't even made a new low, so at that stage I wasn't too concerned. However, look at this move, something like 11% fall on silver. Again in the Asian session, so it's when you've got this low liquidity, and this is the second flash crash we've had in the Asian session within 12 months. So we had pound flash crash around October last year, and it's concerning. Now both of them have been kind of in the direction of the overall trend, so if you're trading in the direction of the trend then you're okay. But if you're a counter trend trader and you're trading divergences for pullbacks and stuff like that, we really need to think about these flash crashes, because potentially if you had a stop down here and you were risking 1%, and look, the 4-hour chart this is, I believe, and it was moving up quite nicely, so you could have said that, you know, you might have had a divergence, you could have said, yeah, I'm long, I'm looking for a pullback up here, etc. And you had a stop down there. Well, you've gone overnight, and what's happened? Well, the market wouldn't have taken you out at that level, you would have got a slippage, and you might have got exited down here somewhere. So your 1% risk could have ended up being an 11% loss or a 10% loss on one trade. So we really need to bear this in mind now with these markets, because as I say, it's becoming a bit more of a common theme, and it does concern you when you are trading counter trend, whether you're going to get these big moves down. So this one was pound yen. So overnight, I've already discussed this. We took the 15 pips profit. We then got stopped out by a couple of pips for it then to roll over. We've now got a re-entry. Dollar yen, I wasn't too worried about this one because we'd had 2 or 3 entries overall across the time, and we'd actually banked some profits on this trade originally. The target that we was looking at was on the 4-hour chart. I'll just go to it now and have a quick look. So 4-hour chart, dollar yen. As you can see, this moving average here, this black line, this 50-period moving average, has not been tested. It kind of got air kissed down here. Still not been tested. So it wasn't too much that we were asking for. We was only asking for, you know, a pullback. You know, some of these moves, you can see it was rolling over, and you think, yeah, we're going to get a move down to this moving average, because that's what a lot of the trading that we're doing. We're either trading counter trend targets that move key moving averages, or we're trading with trends after a touch of a moving average and a continuation of the overall trend. But it wasn't too much to ask. I think we'd had a divergence between this high and this high on one of the time frames or something like that, and we were in short, and as I say, we got nicked out again overnight. But it wasn't a bad thing because the market's pushed up. We'd taken profits anyway along the way on some of this move down, I think, over here. So it overall wasn't a massive losing trade. CAD Swissy, so we got out the last parts of that before, non-farm payroll, same with dollar CAD, we got out of all of those. Oil, we took one trade this morning. I'll just go to the chart and show you what I was looking at for that. As you know, I had the downside on oil, but bearing in mind the price action that we had seen yesterday, this morning we had this move up. So we took this and we got out somewhere around here. It's obviously gone down a bit further. It made this low, but this low did not break this low here. And it was worth the risk because potentially we could have had a pullback up here somewhere, because on the daily charts, we hadn't tagged this upper envelope. So this upper envelope line, so we'd got close, but we hadn't tagged it. So what I was looking for was a move back up to here, which almost would have been 140 odd pips. And I think the stop on it was about 40 pips. We went in extremely low pounds per pip. It was a very low risk trade. And it was just the chance that we had a stop just below here, about 44 pips. And as I say, we were looking for about 140 pips to the upside. But it just rolled over, stopped us out anyway. So that was the one small trade that we took today before non-farm payroll. And that's it really for the week. A mixed week overall. Not a disaster by any means, but we've closed about 1%. But as I say, we're floating now about minus 2% in drawdowns of open swing positions. I'm not majorly concerned about that because they're very low size, so low leverage. And we'll have to just see how things play out next week. The key really next week is we need to go back to basics with the signal. We're going to take clean setups and we're going to stop having as many add-in positions that we're doing, which are great. They are profitable and you can do it, but it kind of gets a bit messy and a bit complicated. So we're going to be taking single or double entries only, and we're going to be closing out at half profits. So closing out half a position or the full position only. And we're going to see how it goes and see how it plans out. Hope that helps. Have a great weekend. Bye for now.